Why such an adverse reaction, not just for these two, but across the whole financial complex to these results, do you think?
Well, I think some of what we're seeing today is kind of the banks giving back to some of the recent outperformance they had. I mean, it really kind of started yesterday. But, I mean, if you kind of look over last week, you had bank stocks up 20%, the market up 10%. I think we're seeing some of that unwind. So it's a little bit more of probably buy the rumor, sell the news now that results are coming out. I didn't think JPMorgan's first quarter results were too bad. Ex-credit cost reserve builds, which we knew was going to be a wild card, a tough thing to forecast, things looked fairly close to kind of what we were expecting. I think maybe there is a little disappointment on the investors' part. There probably shouldn't be, but a little disappointment that we can't get some more clear answers as to exactly how this is going to play out as far as the economy. And I mean, really, at the end of the day, no one really knows, and time will tell was kind of one of the messages from JPMorgan. We're in great shape. We'll do well, but no one really knows exactly how this is going to play out for the balance of the year with the kind of COVID-related economic uncertainty.
One thing, Jeff, I wonder if rings in people's ears were Jamie Dimon's comments in the shareholder letter about how, a 35% drop in GDP could potentially affect their dividend plans, that sort of thing. Now, he was talking about on a sustained basis, obviously, but we're probably going to see something close to that magnitude in the second quarter. Do you think that people are concerned at all about their ability to cover that cash flow, or is that way down the list of issues?
I think it's something investors are concerned about. Honestly, I don't think it's something they need to be concerned about. Whether buybacks continue to year end, I mean, that's maybe a more interesting question. But at the end of the day, the dividend is a fairly small part of JPMorgan's capital, right, and even earnings for them to pay out to investors. And they're really awash in capital and liquidity here. So I don't think it should be an issue. But, I mean, the dividend yield is important to stocks. It's not something investors can ignore. I just think it's going to end up that JPMorgan and the other kind of G-SIB banks will be able to maintain their dividends.
As we move through earnings season, what are you going to be on the look for? I mean, I know a lot of these banks you are overweight on. Maybe a name like Morgan Stanley, I see more of a neutral. I don't know how up to date these estimates are, but it's a tricky time because obviously a lot of this is in the rearview mirror. They're telling us they have no clarity on the road ahead. So do you just have to go back to who you think has the best business model?
Well, that's yes. I think that's one of the things we really like about JPMorgan here is if the environment really does turn out to be even worse than we're expecting, that's the type of environment where in financials the strong get stronger. JPMorgan is strong. They're going to get stronger. If it does turn out to be, a quarter or two down and then a nice kind of V-shaped or at least a U-shaped recovery, JPMorgan's well positioned to benefit from capital markets and a lot of the businesses that kind of come along with that. So I do think the downside priced into a lot of these big bank stocks is probably too extreme relative to at least the outcome I'm expecting economically. But to the point, we don't really know. You kind of got to wait to see it play out. And I think a name like JPMorgan is about as safe a place as you're going to find to kind of wait it out.